We are right now in a crypto bull run, but there are market crashes, as I'm sure you've noticed, sort of all the time. It's kind of annoying, but it's what happens. Why is it happening? Aren't prices supposed to go up during a bull market? What's up with my altcoin bags? Why is everything so savagely destroyed? Why am I so wrecked? And why does crypto in particular sometimes experience such huge, gut-wrenching, puke-worthy corrections? Look, it's never easy watching your portfolio lose value. But the first thing to be aware of is that market crashes during bull markets are normal, and they're usually quite dramatic and disgusting, let's say. It's also true that crashes can be especially violent in crypto. Stocks move slow, Bitcoin moves a bit faster. When you talk about volatile asset classes, look at altcoins, man. Look, when price action isn't exactly going the way you'd like, you start questioning things. But let's look at why these market crashes happen, okay? Looking especially at the situation during bull runs, and starting with, we have to talk about market psychology. Look, you hear a lot about the diamond hands, man, holding through the thick and thin with conviction. But in reality, sentiment can change real fast, super quickly, as traders suddenly start questioning their holdings. I was a genius last month, now I'm an idiot. From there, panic ensues and it creates a self-fulfilling prophecy. Crypto dumps super rapidly because people panic. The herd panics. Enough holders believe crypto can dump rapidly, so they start dumping their crypto. And then other people dump their crypto too. And you got a problem on your hands, right? This leads to crowd contagion as everyone flees for the exits at the exact same time. And then, of course, crypto is prone to reflexivity. This is usually a positive process involving self-reinforcing loops. Rising prices attract buyers, sending prices, of course, even higher still. But it stops at some point. You can also find a bit of a negative impact here because falling prices triggers selling, sending prices even lower, triggering more selling, triggering more panic, and so on and so forth until you find a bottom and you run out of sellers as well, you run out of buyers going up. And this is related to excessive fear and excessive greed in the market. Very few people now think Bitcoin will ever go to zero. But what about altcoins? They go to zero all the time. Altcoins, of course, are less proven, even ones that have been around for a while, making holders very sensitive to fear, uncertainty, and doubt, especially if you've been around the market for a while. You know these things will go to zero. At least a lot of them will. Not everyone, but enough to make a difference. Also, traditional fundamental analysis is used to evaluate stocks. Just really isn't relevant for the vast majority of cryptos. So the market is never exactly sure how much any given altcoin really should be valued at. I know, efficient market hypothesis, right? But I mean, come on. We got dog shit coins out here going to billions. It's crazy. And look, this can all actually be great because it leads to insane FOMO pumps, taking the prices sky high. We'll have upside volatility, but not downside volatility, right? But before we continue, there's a lot more to dive into here. I just want to remind you that every single week, my team and I produce the best damn newsletter in the cryptocurrency business. It's called Wealth Mastery. Our readers love it. I'm sure you will as well. You got to check it out. It's packed with alpha on Bitcoin, altcoins, meme coins, charts, and much, much more. You'll love it. You can join our 135,000 plus weekly readers for free using the link down below in the description or in the pinned comment over on X. Now back to the topic, and let's talk about profit taking and healthy corrections, okay? A major factor leading to price cooldowns, profit taking, man. People sell. They want to cash out, right? Big moves up, people sell and put money in their pockets, which is normal. And that's fairly self-explanatory, right? Price runs up. There's always going to be a cohort of traders and early investors. They got in early, right? Bought low, sold high. They want to realize those gains. And that's a good thing. It's a positive thing. It's a healthy thing for the markets. You can expect this after any big move up. If it's basically the whole point of trading anyway, to make more money, right? You buy low, you sell high. That's the only way you make money in this market, okay? So if the price was low before, but it's high now, well, you can figure out what's probably going to happen next, right? And in the case of a solid asset like BTC, okay, this kind of bull market dip as profits are taken is fine. Bitcoin's going to be fine. It's going to recover, okay? These are all healthy corrections of the long-term uptrend because markets cannot simply go up in a straight line forever. That is massively unhealthy, makes me really paranoid when markets move too fast. It just doesn't happen like that. In fact, dips create sustainable bull runs as prices rise, dip, then consolidate at new levels, shake out the FOMO people, transfer from the impatient to the patient, all that kind of stuff. Consolidation periods aren't fun, okay? They're not. But after you got hooked on those towering green candles, they're necessary, okay? They're necessary for further gains as they establish new support levels, which can act as launch pads for the next leg up, and they shake out a bit of that wild, euphoric greed in the market. So for long-term holders, patience is key. You'll be fine. But let's touch briefly on funding rates and leverage. Look, without going into all the technicalities, okay, you can look at funding rates on perpetual futures contracts and see when the market is really becoming overheated and too frothy. When positive funding rates start getting too high for too long, you can get an over leveraged market. And that may be the precursor to a big fat crash, as when prices dip, traders start losing money and they're liquidated, bringing in forced selling, taking prices still lower, liquidating more people, creating more forced selling, and on and on and on until you erase sometimes billions of dollars of leverage from the market. Those are fun crashes, can go real fast. And look, this can all be seen as a necessary correction as funding rates reset and the market cools down. It doesn't feel like, oh, I'm participating in a necessary correction in the market. I just lost my ass. Doesn't feel good, but that's the reality of it. Now let's talk about sector-specific bubbles. So low-cap altcoins have the capacity for rapid upside, which can contribute, of course, to sector-specific bubbles, like, for example, meme coins. Although it just seems to keep on going, meme coins, doesn't it? NFTs in 2021, not really altcoins. Kind of like altcoins and pictures, whatever. Maybe AI coins or metaverse projects or gaming or whatever. A whole range of tokens within a certain niche or category can be look set to moon and they just go crazy and traders leap in. But these accelerated mini bubbles that happen so frequently in crypto are inevitably followed by mini mega crashes as the sector in question becomes massively overbought. Early buyers cash out, run out of buyers, all usual stuff. Okay, the bubble bursts. Also, the cycle that we're in right now has featured some particularly crash prone narratives, specifically financial nihilism and meme coins. Good. Financial nihilism refers to the idea that new traders are basically giving up on real value, distrusting traditional investments, and therefore going all in on super high risk alternative assets or just straight up vaporware bullshit. It's a gambling mentality. Massive speculation. That feeds, of course, the rise of meme coins as they trade purely on hype and expectation. And you can see how that kind of market might actually get very, very crazy. And of course, very attractive, but it gets crazy really quickly. Huge volatility, up 50x in a day and down 99% tomorrow. Major crashes happen all the time. That said, when it comes to Bitcoin, Ethereum, some of the other more fundamentally sound coins, right? There are plenty of entirely healthy narratives out there, such as in Bitcoin's store of value or peer-to-peer transactions. While in altcoins, we have decentralized physical infrastructure networks. Great stuff. Real-world assets. Great stuff. Gaming. Cool. Stable coins. Amazing. These all have clear utility. And basically, there's a lot happening in crypto that has real value. But there's also a lot of bullshit that people love to speculate on. However, let's just take a moment to focus on some specific altcoin issues. Firstly, there are venture funds that invest in new tokens at the earliest stages. Look, they take early risks by backing companies that may never produce anything, right? And then later, they face pressure, of course, to realize gains for their funds, thus creating sell pressure when they're up massively, especially on these coins. Notably, Q1 2022, when the last bear market was starting, we saw the most ever VC funding. They were largely late to the game, totaled around $12 billion in that quarter. So if VCs are out there eating up the juiciest gains after getting early access, why would retail really want to buy these tokens that are up 10,000x for the VCs or something like that? Basically just being exit liquidity for the VCs and the large funds. And then there's the issue of token unlocks, which of course may increase supply in ways that existing demand simply cannot immediately absorb. For example, earlier this year, Arbitrum's token saw its market cap soar. Well, the token price itself just kept tanking. Glad I sold that one. This happened because of large supply unlock flooding into the markets, like a 40% increase in supply. It was absolutely insane. Now, when it comes to altcoins, obviously you have to check the tokenomics. How will the supply increase? How much is held by investment funds? When will early investors be able to sell their tokens and cash out for massive profits? And how much are they up? Now, according to any lockup period they've signed to, you got to be aware of all this stuff, okay? Anyway. So we've discussed psychology, we've discussed the factors within the cryptocurrency market, all that kind of stuff. But don't forget about the external factors, because crypto does not exist in of itself. It's part of the world, right? Crypto goes up and it corresponds a lot with stuff like money supply expanding, which makes sense. There's big stuff, Fed, central banks, all that stuff. When cash is available, crypto absorbs it. But the opposite is also true. Contracting money supply means crypto takes a hit as well. That means it reacts to the Fed meetings, the CPI inflation data, when we get to assess the Fed's outlook and possible future actions and all this kind of stuff. And then there are global factors. There's wars, there's political crises, there's the price of oil, there's all kinds of stuff. But be aware that these can switch in their effects with an example being COVID. In March 2020, Bitcoin crashed hard on the COVID news. But then what happened? Governments turned on the money printers in a way which we've almost never seen before. It was wild. They locked entire populations at home with just the internet for company and gave them a bunch of cash and said, go have fun. And in this unprecedented scenario, people went out and speculated wildly on crypto coins. We had a wild crypto bull market in 21, alongside the GameStop, meme coin, stonk saga, and all the rest of the crazy that happened. We can also factor in crypto market specific external factors, if you will. For example, the US government or the German government have recently been selling Bitcoin that they took off hackers or whatever. Or we have the Mt. Gox creditors getting paid back their Bitcoin this year after a 10-year wait. They're going to get coins and dump them on the market. These kinds of rare events can cause a lot of fear in the market, which, to be honest, the fear itself is often worse than the actual selling from these entities. Everyone's just quiet about it. Nobody even know. But everyone gets freaked out about it, man. Now, it's good to be aware of these events, but it's also good to be aware they're often isolated and short-lived and don't have a major long-term impact on the market. And right along with that, we can count things like China banning crypto for the 50th time, India banning crypto for the 30th time, and so on and so forth. The market loves to freak out when that happens, but it generally just doesn't really matter all that much. Finally, let's finish by identifying how to stay safe and how to profit. Now, for high conviction coins, especially Bitcoin, Ethereum, stuff like that, you can zoom out, okay? You don't need to overtrade. And as long as we're in a generally bullish market structure, you can hold or accumulate more during dips, okay? Looking for buy signals like the RSI going into very, very low oversold readings, or the hash ribbons indicator flipping a buy signal, for example, which picks up on hash ribbons case picks up on periods of minor capitulation that suggests Bitcoin is reaching a price bottom. Now, for small cap altcoins and all that fun, wild, degenerate stuff, and especially for the most crazy, volatile micro caps and the meme coins, and you know what we're talking about here, you should focus on taking profits aggressively during big moves up. Don't underestimate how deeply and savagely these coins can retrace. And of course, look out for traders boasting about their big old fat profits on Twitter and their Rolexes and all this kind of stuff, because those might be signals too that you should be realizing your gains. If you want to find out more about spotting top signals in the market, go watch my video on it. It's great. Look it up. Also check how much the token price has moved overall, not just since you bought it, right? Maybe you got a 2x and you think, wow, I should hold on for a 5x. But if the coin already did a 20x before you even bought it, then guess what? There's a lot of earlier buyers that have some pretty big profits. They might want to cash out on top of your head, and they might quickly move the price back down. It happens all the time. Okay. Now, if you're very sure the crash is coming, then you might want to take some short positions. Of course, you take your money out, but also take some short positions. But that's always risky in a bull market, and it's more advanced skill. You don't need to do that. Okay. You can just wait and buy a dip. Also, just remember, a reminder here for you that we're talking about market crashes during a bull run, when for solid coins, holding is a viable strategy. However, when the bull market top is in, again, go watch my bull market top signals video. When the bull market top is in, the market structure is flip bearish. You got to get out. You probably need to sell almost everything. Maybe you can hold your Bitcoin, your Ethereum if you really want to just ride those down. You're comfortable sitting in big losses on those for a year or two. But yeah, get in your stable coins, get in cash, get out. Above all, of course, never panic, always stay safe. And thanks for watching. I'll see you in the next one.